This hearing of the Subcommittee on General Farm Commodities and Risk Management, entitled How Farm Policy Helps Farmers in Adverse Conditions, will come to order. Good morning, and thank you all for joining us here today to discuss how farm policy helps farmers take on the challenges they face this year. Today's set of federal farm programs is generally designed to assist farmers when they are most in need. At no time is that need more apparent than in the farm economy right now. Farmers are looking at losses due to severe weather events, particularly as a result of flooding and a wet spring planting season. Excessive moisture on cropland has delayed planting for many farmers in the Midwest. The Agriculture Department's Crop Progress Report, which was released on Monday, shows that the corn crop has still not been fully planted, and many farmers are making decisions to switch to soybeans or a cover crop. Last week, the World Agriculture Supply and Demand Estimates report described this year's planting delays as unprecedented. Commodity prices have been generally low for several years. Reduced foreign demand as a result of the trade war has made this situation worse. The risk management system is structured to assist farmers in both of these types of cases, and many operations across the country are in fact confronted with both challenges. Through multiple hearings on several subcommittees, we've well documented the pain currently in the farm economy. Farm bankruptcies are up, farm profits are down, prices are in the tank, credit is tight, and the weather has been not only terrible, it's compounding the already present hardship for farmers. This subcommittee heard from several farmers at a hearing last month and how a struggling farm economy has affected their operations. At our hearing today, we will examine how farm policies help farmers in tough times. Crop insurance is a publicly supported program delivered by private companies and agents that provides timely assistance to farmers. Farmers can customize their coverage and can choose how to best manage their risk, and they can expect timely service and assistance when they suffer a loss. Standing disaster programs run by USDA are designed to respond when certain disasters strike. Emergency disaster programs, which are authorized in response to particularly extreme or large-scale disaster events, have also been enacted in recent years and are providing assistance. Additionally, existing commodity programs, as authorized in Title I of the Farm Bill, provide a baseline level of support when prices fall. Today's witnesses know the importance of these programs and policies and speak from a wide range of experiences in working with the farm safety net. I look forward to each of your testimony because I know the conversation on crop insurance is not an easy one. At a time when every federal dollar is scrutinized, I appreciate the challenge facing the industry to explain how crop insurance works and why it's such an indispensable part of the farm safety net. If there is a silver lining to this economic storm, it's that there's never been a clearer need for programs like these that help to keep our farm families in operation. With that, I'd like to recognize my ranking member, Mr. Thompson of Pennsylvania, for any opening remarks he'd like to make.
Chairman, thank you so much for convening this hearing to talk about what, unfortunately, is a very timely topic. We all know that farming and ranching come with a unique set of challenges and an inordinate amount of risk. It takes a very special person to be willing to borrow 6 or 7 figures from the bank every year, more than many of us will borrow in a lifetime, just to plant a seed in hopes that they will be able to harvest a crop. Now, these folks are the salt of the earth and they fuel our rural economies. But perhaps most importantly, because our farmers are so productive, they are able to supply Americans with the safest and most affordable supply of food in the world. And while farming has always been a risky business, it seems like in recent years, particularly this one, farmers and ranchers really just can't catch a break. You know, between years of hurricanes, tornadoes, fires, blizzards, and of course record-breaking floods and rainfall all across this country, no region has been spared. And that's to say nothing of the economic damage being caused by the illegal retaliatory tariffs imposed by China and others. As everyone in this room knows, the Farm Bill is the primary vehicle which we use to provide risk management tools to our nation's farmers and ranchers. Now, I'm proud of the work that we did in the previous Congress to reauthorize the 2018 Farm Bill without the need for an extension, which would have magnified uncertainty that our farmers face today. Now, we spent months and months working to make several targeted improvements to farm policy, And I'm proud of the fact that the House prevailed against the Senate's proposed cuts to the farm safety net. And while the farm safety net is designed to be flexible and tailored to specific circumstances on a farm, catastrophic events over the last couple of years have shown that there's still work to be done. In the interim, Congress recently stepped in with a round of supplemental disaster assistance for those directly impacted by the recent catastrophic events. And while our farmers and ranchers can compete with anyone in the world, the recent illegal retaliatory tariffs have shown that our producers cannot compete directly against foreign governments. For example, the United States recently won a case at the WTO against China for shelling out $100 billion in a single year to subsidize just 3 crops, a clear violation of the commitments that they have made and more than we will spend in more than 7 years on all of our authorized farm policies for all crops. And while the Farm Bill is designed to help level the playing field, it is not designed to handle targeted retaliation by a centrally planned foreign government. As a result, I appreciate that the administration stepped in to help our producers, and I look forward to the second round of market facilitation program assistance being provided as soon as possible. On today's hearing, we have a panel of witnesses that all bring a unique perspective on how recent disasters are impacting producers and how various policies are responding. Now, I hope that today we can tease out how these various tools are addressing the different risks producers are facing while examining where there may be room for continued improvement. Mr. Chairman, I want to thank you for convening this hearing, and with that, I yield back.
In consultation with the ranking member and pursuant to Rule 11E, I want to make members of the subcommittee aware that other members of the full committee may join us today. And I now recognize Chairman Peterson for an opening statement.
Thank you, Mr. Chairman, and thank you and the ranking member for your leadership and calling this hearing. Obviously, it's a good thing we got the Farm Bill done, and we've got that in place, as was noted. And, you know, crop insurance is doing a good job, you know, the industry and the agents and all the people involved, and that's certainly helpful. But I am concerned, and these facilitation payments are, I don't think they're going to solve the problem, but they're certainly helpful, and that's all good. But I am worried about where we're heading. In my part of the world, we've got people, some people haven't planted their whole farm. And it's been a tough spring, not only in my area, but across Illinois, Indiana, all those kind of places. And that has, you know, brought back corn prices, I guess, to some extent, which is a helpful thing. But, you know, we have survived the last number of years because of big crops. We've survived low prices because we had big crops. Last year, crop wasn't so good. This year, it's going to be even worse. The prices, corn has improved, but soybeans are still in a big problem, and I don't see that changing. The hog situation in China, where they have more hogs than anybody else in the world, over half of the hogs apparently have died in China, and so that market has gone away. And when the committee went to South America, I was expecting to find in Brazil and in Argentina that the Chinese were in there trying to buy from them big time because of these tariff situations, but that was not the case. And I think the reason is because the demand is not there because of the African swine fever situation. So, you know, I hope my misgivings are wrong, and I hope we're not going to be facing significant problems next winter, but I'm kind of afraid of where we're heading with this whole thing, and, you know, we'll just have to monitor the situation and respond if it gets as bad as I think. Bankers are starting to talk to me about, they're worried about what's going to happen next winter, whether they're going to be able to finance everybody. And, you know, so I hope we get these trade wars over with. That's going to be helpful, especially my hog producers who are probably being affected more than anybody else by this because they have a big demand in China right now because of, you know, what's happened with swine fever. And you know, we can't sell into China because it's a 62% tariff or whatever it is, and so it just doesn't work. So hopefully we can get those things behind us. Hopefully the rest of the year will be better weather-wise than what we've seen so far, and we'll make some kind of recovery. But, you know, I think we're heading into some tough times, and we appreciate the crop insurance industry for being there, and that's certainly a big help. What they're doing with dairy and crop insurance is going to be a big help. But the problem with crop insurance is that you can only insure what the market price is. And so if the market price is below the cost of production, you're insuring a loss. And that's just the way it is. There's no other way to do it, but that's the reality. And, you know, the only way you can change that is change the PLC and so forth in the Farm Bill, which is probably not realistic. So we'll just have to work through it and make sure that the committee stays on top of what's going on and responds when we have to. So I thank the chairman and the ranking member for their diligence, and I yield back.
Ranking Member Conaway is now recognized for his opening statement.
Thank you, Mr. Chairman. I too appreciate you calling this hearing. I want to agree wholeheartedly with my colleague from Minnesota, his concerns and issues he brought forward. I won't repeat those other than to say one of those pieces of the trade deal that we could get done today or soon would be the USMCA agreement between Mexico, Canada, the United States. Mexico has ratified the agreement. We need to get that process moving forward. It would help begin to take some of the uncertainty out of what our farmers and ranchers face. Look forward to hearing our witnesses today to get a better feel for how these things work or don't work. And with that, I yield back.
The chair would request that other members submit their opening statements for the record so the witnesses may begin their testimony and to ensure that there is ample time for questions. I'd like to welcome all of our witnesses. Thank you for being here today. At this time, I'll introduce our first witness. Mr. Bradley D. Lubin is an Extension Associate Professor and Director of the North Central Extension Risk Management Education Center at the University of Nebraska-Lincoln. He has more than 24 years of experience in teaching, research, and outreach focused on agricultural policy and economics, specifically federal farm programs and risk management. Dr. Lubin grew up on a livestock and grain farm in Nebraska and holds bachelor's and master's degrees from the University of Nebraska-Lincoln and a PhD from Kansas State University. Mr. Leo Edelman is a our second witness is a sixth-generation farmer from Sidney, Iowa. He is a member of the Governor's Flood Recovery Advisory Board, where he serves as the chairman of the River Management and Infrastructure Working Group. He is also the chairman of Responsible River Management in Fremont County, Iowa. Our third witness is Ms. Ruth Gertis, president of Auburn Agency Crop LLC in Auburn, Nebraska, and she is testifying on behalf of the Crop Insurance Professionals Association. Ms. Gertis grew up on a farm and ranch in western Nebraska and attended the University of Nebraska, where she earned degrees in agricultural science and animal science. Through her work at Auburn Agency Crop, she helps to provide crop insurance services to nearly 1,800 farmers. Now I would like to recognize Mr. Carvajal for an introduction of our fourth witness.
Thank you, Mr. Chair. It's a real pleasure for me to introduce one of my constituents, Mr. Michael Davenport. Mr. Davenport serves as the current chairman of the American Association of Crop Insurers and resides in Santa Barbara, California, located in my district. After graduating from the University of Iowa College of Law, Mr. Davenport began his career at Wilson & Pakachek, PLC, where he supervised nationwide crop insurance coverage on behalf of multiple clients. He then went on to serve as vice president and general counsel at Rain and Hail Insurance Services, where he was a key member of an industry-wide crop insurance negotiation with the federal government. Currently, Mr. Davenport is the chief operation officer of Chubb Agriculture, a company that writes over $2.6 million of insurance premiums. Between his experience in the crop insurance industry and his close proximity to Central Coast agriculture productions in my district, Mr. Davenport is no doubt aware of how important reliable risk management programs are for farmers. Welcome, Mr. Davenport.
Mr. Lawson, you're now recognized for an introduction of our fifth witness.
Thank you, Mr. Chairman. It is my pleasure to introduce Mr. Marcus Boone, Senior Vice President and Chief Lending Officer of Farm Credit. of Florida as a witness for us here today. Mr. Boone has over 35 years with Farm Credit, 21 of which has been with Farm Credit Florida. Financial institutions such as Farm Credit Florida are vital to supporting agricultural communities around the country by providing them with loans and service to help assist their farmers and ranchers through good and bad times. For years, Florida has suffered from adverse weather and environmental conditions which have threatened the foundation of our agricultural industry. Deep freezes, wildfires, hurricanes, and more have made the Sunshine State no stranger to inclement weather. The agricultural economy in my home district is no exception. From the 72 million tons of timber destroyed by Hurricane Michael to the acres of damaged cotton and peanut lands, effective farm policy and proactive engagement by both federal, state, and private entities critical to ensuring that these crops and their producers remain resilient. I look forward to the testimony from Mr. Boone, and will deliver to this community on a unique challenge in Florida farmers' economy face due to adverse weather conditions. Thank you, Mr. Chairman, and welcome to the committee, Mr. Boone.
Today's final witness is Mr. Brandon Willis, Assistant Professor at Utah State University. He served as the Administrator of the Risk Management Agency at USDA from 2013 to 2016, and spent that time working at USDA on Capitol Hill prior to that. He has an undergraduate degree from Utah State University, a law degree from the University of Wyoming, and an LLM in agricultural law from the University of Arkansas. Mr. Willis now sells crop insurance as an agent and works with Combest, Sell, and Associates. We will now proceed to hearing their testimony. Each witness will have 5 minutes. Given the number of witnesses and member schedules today, I'm going to keep a pretty tight lid on that. When 1 minute is left, the light will turn yellow, signaling you to start wrapping up your testimony. Mr. Lubin, please begin when you are ready.
Good morning. Thank you, Chairman Vela, Ranking Member Thompson, distinguished members of the committee. Thank you for the invitation to appear before you today and to share my perspective. I'm Brad Lubin. I'm an Extension Associate Professor, Policy Specialist, and Director of our Extension Risk Management Education Center at the University of Nebraska-Lincoln. I have a presented testimony that I share with you, but I would simply summarize it for the record here today to note that it is worth highlighting sort of the extent of current conditions and challenges for producers in Nebraska and elsewhere. It's worth noting the existing farm income safety net, a very broad safety net, and all the different tools that help producers manage that risk and those challenges, but also the complexities and sometimes even the competition between different parts of those tools. And I'll close with a comment on risk management education and the need to help educate producers and ensure that they're positioned to make good management decisions and to use these tools effectively. Certainly you've undoubtedly heard of and read of the losses in Nebraska related to the bomb cyclone event that occurred in March, about 3 months ago now. Those losses were dramatic: loss of life, loss of livestock, loss of property, substantial damage, et cetera. The losses are estimated by some estimates in the hundreds of millions of dollars for crops and for livestock. And certainly the role of disaster programs and the role of crop insurance are paramount in helping producers manage and recover from those losses at present. But still, they are dramatic losses, and I think they'll be highlighted here further on the panel to come. I talk about the role of crop insurance and the role of disaster assistance, and importantly, we first look at the standing disaster assistance programs, the programs that have been previously authorized in Congress and are administered through USDA and other departments, but particularly the large portfolio programs administered through the Farm Service Agency, whether it's emergency loans or emergency conservation programs or the livestock indemnity and other programs. They have helped producers manage and cope with these losses, but as I said, it's still a substantial impact. We could also look at the broader income perspective and note that current farm incomes were projected substantially down even before the events of this spring. By many measures, we're talking about conditions we haven't seen since the 1980s. If you look at real farm income statistically, we're talking about the lowest real farm income since the late 1990s. Not coincidentally, a period when farm income suffered because we lost export markets. And we had disaster assistance in response as well back then. I mentioned this broader context of safety net programs. Think of the federal farm income safety net as we analyze it economically. Clearly, the commodity programs are an important part of that safety net, as is crop insurance, often considered the foundation of the safety net today. Don't forget the standing disaster assistance programs, as I mentioned, that have been previously authorized. We also have the ad hoc responses, the emergency assistance that was passed here in Congress just in the last couple of weeks, and the assistance announced by the administration relative to trade assistance. All of those programs provide support to producers. All of those programs help producers manage the risk they face, but they also, in some cases, do compete with each other. Crop insurance has provisions to cover crop losses. When those losses are relating to market prices, we might also see the role of PLC and other commodity programs cover the same loss. We have crop insurance provisions that are mimicked in some cases by disaster programs and the emergency responses as well. So it's important as we talk about programs to think about how the programs work together and think about how they might help producers efficiently manage that risk. I close by noting this focus on risk management. As I said, I have the privilege of serving as the director of our Extension Risk Management Education Center at the University of Nebraska-Lincoln. That center is funded through competitive funds from USDA's National Institute of Food and Agriculture to in turn run a regional grants program that funds producer-focused, results-based risk management education programs. Those programs help producers manage a wide range of risk, marketing, to production, to financial, to legal, to human risks. And it's important that we have producers capable and able to learn the things they need to help manage those risks and be effectively positioned to deal with the challenges we have. I thank you for the time, and I appreciate and look forward to any questions.
Thank you. Mr. Edelman, you may proceed.
Good morning, Chairman Vela, Ranking Member Thompson, and members of the subcommittee. A sincere thank you to Congresswoman Axney for inviting me to speak. I am honored to give a voice to a topic that affects countless Americans across the heartland. My name is Leo Edelman, sixth-generation farmer from southwest Iowa. I was raised there a half mile from the Missouri River. For more than 100 years, my family has farmed the Missouri River bottom. When managed correctly, the river provides a good life and sustains countless people. The recent catastrophic flooding has been well publicized, but what's largely ignored is the mismanagement in our inland waterways and the lack of flood control prioritization. Close to home, I've seen changes made to the management and flows of the Missouri River. In the mid-2000s, the changes were accelerated with an update to the river's master manual and amendment to deprioritize flood control. Since then, flooding has become more frequent, severe, and costly. In 2011, we had a breach of a Missouri River levee just a half a mile from my family farm. The land was devastated. It took 4 years to clean it up. 2018 was an extremely challenging year. Rain and high reservoir releases prevented corn and soybeans from being harvested. 2019 brought significant snow and ice. This spring's unusually warm weather, record rainfall were disastrous. This natural disaster was avoidable. And to continue managing the river the same and expecting a different outcome is fiscally irresponsible. Until you witness and experience a catastrophic force of flooding firsthand, you cannot appreciate and understand the disruption to life and the emotion and economic toll it extracts. The flooding is still ongoing, and the negative impact will be felt for years to come. As I sit before you today, hundreds of thousands of acres of farmland remain underwater. Vital infrastructure like roads, bridges, are impassable. Traffic has been rerouted to county roads. These two-lane roads were not designed to safely handle heavy traffic flows, resulting in increased traffic accidents, injuries, and fatalities. We personally still have 85,000 bushels of grain stranded, valued at nearly $450,000. Floodwater has impacted the first 12 to 14 inches of these structures. The grain is rotting. As these supplies shrink, so does the much-needed income it represents. Many operators owe money against the 2018 grain that was destroyed during this year's flood. Sadly, many won't recover. If breach levees aren't repaired back to the 100-year protection level, our crop insurance and farmland could be re-rated. If it is, we will become high risk, resulting in higher insurance premiums. Because of the continuing mismanagement and flooding in the Missouri River, we no longer forward contact grain, which is how farmers secure a price for grain that has not yet been delivered. That's because at any given time, we run a risk of losing our crop. Lacking the ability to use this simple marketing strategy puts us at a competitive disadvantage. The question is, will this disaster affect the change that is desperately needed? Moving forward, we must not only rethink how we manage the Missouri River, but also how we sharpen policy that will shape agriculture's flooding. If we are to stop the reoccurring devastating flooding of the past 12 years, flood control must be the top priority in management of the Missouri River. The water control structures in the channels below the dams must be rehabilitated. We must explore more ways to drive more investment into flood-ravaged communities. Policy can serve as a catalyst and help make this happen. It is my hope, sincere hope, that Congress acts to improve USMCA trade agreement, acts to implement the 2018 Farm Bill with a vast improved farmers' safety net, acts to address the very basic infrastructure needs, acts to ensure flood control is the dominant function of the Missouri River. Even with a positive ruling in Nidecker versus USA, if actions are not taken, we can't expect larger and more expensive floods. Farm Belt bankruptcies will soar even higher. Farmers and rural communities will begin disappearing from the map. That is not what this farmer or our country wants or needs. Let's get to work, reclaim our rivers, farms, towns, protect the lives and livelihoods of future generations. Thank you very much.
Thank you, Mr. Edelman. Ms. Gertis, welcome back, and you may begin.
Chairman Vela, Ranking Member Thompson, and members of the subcommittee, thank you for having this hearing. It is designed to help us and get some information to you. In my agency, we've been working nonstop ever since this bomb cyclone hit and even before. We're not through it yet. However, I couldn't have done it without some help from a good team. I'd like to recognize Michael Smith, CEO of Armtech. I wouldn't be sitting here today if he hadn't been willing to send 3 employees to my office to staff it for my farmers without his help. Thank you, Michael. I know it's not within the jurisdiction of this committee. However, I echo what Mr. Edelman just said. I'm deeply concerned about the levees not being repaired in a timely manner and what's going to happen to the farmers' crop insurance in those areas. We could have this unfold again in billions of dollars in losses. Of course, what has made this year's worst flood ever is the fact that we're also dealing with a depressed price. I have 4 things that crop insurance has done very well. It is real and it is bankable protection. Crop insurance is affordable and a good value to the farmer. It's a cost share. That farmer has to put up his own cash in order to buy the crop insurance. Crop insurance leverages the farmer's resources. That leverage is critical. We invest in more technology, better seed, everything we can do, as Mr. Peterson said, to produce those bumper crops in the last years. Crop insurance has an incredible delivery system. As I sit here today, we have already paid 2019 prevent plant claims to some of our producers. I don't think that would happen without what's going on with private industry. Crop insurance is dynamic and market-focused. Without the 508H process, where we can bring things to the market, we wouldn't have the revenue policies. While crop insurance is the most important tool to us, some things have been done to crop insurance, and the first one starts with prevent plant. Briefly, OIG at USDA conducted an audit, included based solely on the 5 years of the highest prices we've ever had for commodities, that prevent plant coverage should be lowered. And that happened, and we would tell you, as SEPA did, then it was a bad idea. How bad of an idea? One particular farmer, average farmer, in 2012 had $553 an acre in guarantee under prevent plant. With all these changes forced upon the industry, we're now at $330 on that exact same farm that has a higher APH. So it's not surprising to me that prevent plant was included in this disaster bill. Now I want to say something. As a farmer myself, I want to say I strongly support both the recent disaster packages and the MFP. When people and farmers are drowning, they don't care who sends them a life vest. I thank the members of Congress for stepping in at this critical juncture for so many farmers. Crop insurance, simply put, is something we need to work on as a better way. The reasons for investing in crop insurance as a better alternative to ad hoc disaster are just as valid today as when my then Senator Bob Kerrey, Senator Roberts, Chairman Stenholm, and Mr. Combest worked to strengthen crop insurance in 2000. With that, I want to offer some very specific suggestions. Number one, better structure prevent plant coverage so that it can move with the market. Second, in a true disaster situation such as we're in now, deal with the enterprise unit for those farms that will not get the 2020 rule. Third, I would hope the private industry would step up to try and devise through crop insurance a policy to ensure grain from previous years. Fourth, I say that we have to do something to repair these levees, or none of the other stuff will matter for the farmers in our area. I conclude by saying we need to be proactive in crop insurance rather than reactive. We had many good years of bumper crops that lulled us to sleep. We saw the shortcomings this spring. We can improve and avoid ad hoc if we work together. Thank you for holding this hearing. I hope the suggestions are helpful. I will do my best to answer any questions that you have had and stand as a resource for you and any of your staff. Thank you.
Mr. Davenport, thanks for joining us again.
Thank you. Chairman Vila, members of the committee, Ranking Member Thompson, thank you for the opportunity to testify today. Congressman Carbajal, thank you for the very kind introduction. My name is Mike Davenport. I'm the Chief Operating Officer of Rain and Hail, a Chubb company, and we are the largest writer of federal crop insurance. Today, I'm testifying on behalf of the American Association of Crop Insurers, ASA, and currently serve as the chairman of the association. ASA represents every private sector involved in marketing and servicing federal crop insurance. We represent insurance companies, agents, adjusters, reinsurance brokers, and reinsurance companies. We have over 5,000 members. Every year, some part of the U.S. experiences a natural disaster. Every farmer knows their livelihood is subject to the whims of Mother Nature. To channel Garth Brooks, farmers' paychecks depend on the weather and the crops. Many only harvest one crop a year, meaning one paycheck for a whole year. For these reasons, the U.S. has crop insurance to help mitigate production and price risk. I'd be remiss if I didn't thank you, members of the House Ag Committee, as well as members of the Senate Ag Committee, for continuing to invest in crop insurance, most recently with the passage of the 2018 Farm Bill. Today, many farmers are facing difficult planting decisions due to the record rainfall. No farmer likes to decide not to plant. They all want to help feed us. I can assure you, crop insurance agents like Ruth are working overtime with their farm clients right now, walking through insurance coverage, helping them with these difficult decisions. After the drought in 2012, indemnity payments totaled $17.5 billion. That was a record payout. I'm hopeful that the 2019 losses will come nowhere near the 2012 record, but if they do, crop insurance as an industry stands ready to meet that challenge. Last year, farmers paid nearly $4 billion in premiums and received nearly $7 billion in indemnities. We anticipate the farmer paid premium will be a similar amount this year, and it's way too early to tell what the indemnities will be. Crop insurance companies will adjust and pay claims as farmers file them. We'll do it quickly and fairly, no differently than we have in the past. For example, at Rain and Hail, we've paid preventive planning claims in 2018 at the rate of 4.5 days after the claim was filed. So we get the money out very quickly to the farmers, put it in the countryside. As a national writer, we're also able to bring in loss adjusters from areas of the country that are not experiencing high claims to the areas that are, so we can more quickly help farmers. Unlike disaster payments that come months or sometimes years after the disaster, crop insurance pays quickly. We would like to highlight 4 reasons that crop insurance is a superior risk management tool and important to the farming community. First, flexibility. Farmers can tailor the coverage to fit their specific needs, and they have choice in the coverage level that they pick from 50% to 90%. Numerous coverage plans are available for over 130 crops. Insurance plans include yield guarantee protection, revenue products that provide yield and price protection, area coverage programs, and whole farm revenue protection, which ensures the entire farming operation. Second, affordability. Since the government shares in the risk and administrative costs, growers can purchase crop insurance at more affordable rates. This cost-sharing arrangement makes it possible for many growers to secure better coverage than they otherwise could afford without government assistance. The result is affordable protection for the growers and manageable costs for the taxpayers. Third, availability. Private sector delivery provides competitive, localized service for growers. They can purchase crop insurance from the local agent and company of their choice. Additionally, private industry competition ensures prompt service on claims. This widespread availability creates choice and competition that helps protect and stabilize rural economies in small towns across America. Fourth, predictability. Unlike disaster payments, crop insurance is predictable. Farmers and their lenders know what their protection is before the growing season starts. Farmers can use the insurance coverage to secure loans. From the taxpayer standpoint, crop insurance is more economical than disaster payments because the grower pays a significant portion of the cost. Again, about $4 billion annually. In closing, while we are focused on preventive planning claims right now, we are mindful that the late planning will create a shorter growing season than normal and will likely cause additional losses. We are ready to assist farmers as the season develops. We fully understand the significant job before us and are ready to fulfill the promises of the Federal Crop Insurance Program to each and every farmer who purchased policy. Thank you again for this opportunity to testify, and I look forward to answering your questions.
Thank you. Mr. Boone, please.
Good morning, Mr. Chairman and members of the House Agriculture Subcommittee on General Farm Commodities and Risk Management. My name is Marcus Boone. I am the Chief Lending Officer of Farm Credit of Florida, which is part of the Farm Credit System. Congressman Lawson, thank you for your kind introduction. It's a privilege to represent Florida agriculture here today. Mr. Chairman, I would add I spent several years working for Farm Credit in your district in the Valley and have a deep appreciation for Texas agriculture. In addition, my first Farm Credit job was in Tifton, Georgia, hometown of Congressman Austin Scott. So this is a great homecoming for me to share a few thoughts with you all today. The Farm Credit System's mission is to support rural communities and agriculture with reliable, consistent credit and financial services today and tomorrow. In support of that important mission, Farm Credit of Florida provides loans to farmers, rural homeowners, farm-related businesses, and other agribusiness firms in 36 counties in Florida. Our service territory runs from the Georgia-Florida state line down to and including the Florida Keys. We support more than 2,850 customers with $1.2 billion of loans. Like all Farm Credit institutions, Farm Credit of Florida is a cooperative. We are entirely owned by the customers we support, and they elect our board of directors. As the owners of our cooperative, our customers share in the success of our organization through patronage dividends. Over the past 5 years, Farm Credit of Florida has returned $50,750,000 in cash to our customer owners. Farm Credit of Florida remains financially strong and is fulfilling our mission in the current difficult agricultural environment where prices for commodities remain stubbornly low. Regardless, we remain committed to working for the best possible outcome for each customer we serve. Every operation is different, and we work with individual farmers and ranchers to help them deal with the current environment. A critical tool for working with our customers is the FSA Guaranteed Farm Loan Program. We appreciate your support of that program and for the 2018 Farm Bill, which increased those lending caps to $1.75 million. Raising those caps help better reflect the modern realities of farming. In Florida, we are very blessed to serve a territory with great diversity in agricultural production. We finance everything from field crops to citrus and other tree fruits. We finance the equine industry and cattle operations. We support timber producers and ornamental plant growers. And Florida is truly a specialty crop state, growing the majority of winter vegetables Americans consume. Many of the producers we support generally experience favorable operating results across the past 2 seasons, despite the repeated severe weather events. Others are suffering from losses caused by recent natural disasters and low prices. Despite these difficulties, we remain optimistic about Florida agriculture. And one of the reasons why is the strong farm safety net you reaffirmed by passing the Farm Bill last year. As a lender to farmers and ranchers, we fully understand the value to producers of the federal crop insurance program. It allows lenders to finance many agricultural producers, particularly young and beginning farmers, who typically have less collateral and equity. For many of our customers, crop insurance is the only real risk mitigation tool available. When insured at proper coverage levels, crop insurance provides a comfort level and mitigates risk in an inherently risky business. The program has always been about helping the grower recover from a peril by providing a program to recoup a portion, if not all, of their production cost. Whole farm revenue protection also plays an integral role in Florida agriculture, especially for our specialty crop growers. Overall, the landscape in agriculture across the country and within Florida continues to challenge producers. Fortunately, the 2018 Farm Bill reaffirmed the farm safety net, and we thank you and your colleagues again for providing the certainty that our nation farmers and ranchers deserve. We're also grateful that Congress finally passed much-needed disaster assistance and look forward to its quick implementation. As we have done for over 100 years, farm credit institutions remain committed to working closely with each individual customer to ensure their best possible outcome. Thank you again for the opportunity to testify, and I look forward to your questions.
Thank you, Mr. Willis.
Chairman Vela, Ranking Member Thompson, and members of the subcommittee, I appreciate the opportunity to discuss how farm policy helps farmers in adverse conditions. I commend you for holding a timely hearing on this topic. My name is Brandon Willis. I'm an assistant professor in the Applied Economics Department at Utah State University. Prior to working at Utah State University, I oversaw USDA's crop insurance program as the administrator of the Risk Management Agency. Before that, I served as senior advisor to Secretary of Agriculture Tom Vilsack and was the deputy administrator for farm programs of the Farm Service Agency. Natural disasters inevitably impact agriculture. How and if we respond to these disasters is where I'll focus most of my testimony. There are 2 primary methods to respond to disasters. First, through the federal crop insurance program. Second, through ad hoc disaster assistance. During my time at USDA, I worked directly on both. I will share thoughts based upon those experiences on how to best respond to disasters, as well as conclude with thoughts and suggestions on improving crop insurance. A few years ago, we heard from some quarters that farm policy was no longer necessary, and producers could manage the risk of losses stemming from major disasters on their own. Today, we know better. I'm not suggesting that farm policy is perfect, but it does get a whole lot right. Our nation's agriculture policy has benefited America's farmers, ranchers, and taxpayers. We're stronger because of these policies that have invested modest amounts into a safety net for our producers. Crop insurance is a central part of this success and has likely kept more of your constituents in business than you realize. I remember as administrator of RMA how frequently farmers would come up to me when I was visiting with them and say the same thing. And they'd say, without crop insurance, I would no longer be in business. Or perhaps the next generation would come up and say, without crop insurance, I couldn't have started or taken over the family business. These conversations remind me that for many people, crop insurance is a difference between being a farmer or needing to find another job. Farm policy has not just benefited farmers, it's benefited taxpayers and consumers. For example, the percentage of the total federal budget comprised by the farm safety net has fallen significantly over time. Consumers have benefited due to the efficiency of agriculture. According to USDA, since 1948, U.S. agricultural output has almost tripled, up to 269%. What's the result? Americans have consistently spent less of their disposable income on food. Agriculture policy has also benefited the environment. As a requirement to enroll in any safety net program, farmers must comply with certain conservation standards. These standards have sharply reduced the amount of soil erosion. You cannot disconnect the success of agriculture from our nation's farm policy. I would like to offer a few thoughts based upon my experience on how we could continue to improve farm policy, and specifically, ideas on how to reduce ad hoc disaster and save taxpayers' money. Working at the Farm Service Agency, I gained nothing but respect for the staff that is frequently called upon to deliver ad hoc assistance to our farmers and ranchers under difficult timelines. At times, as has been demonstrated recently, ad hoc assistance is necessary due to extraordinary events and losses. But efforts must continue to be made to reduce the need for ad hoc relief through renewed efforts to cover losses through insurance. Ad hoc is frequently inefficient, inequitable, slow, and uncertain. Farmers need more reliable options to manage risk, even if it costs them a little bit more money. History has demonstrated that federal crop insurance is a more effective way to help, not just for the producers, but for taxpayers. With crop insurance, producers have the confidence that they can make investments in their operations to remain efficient and competitive in a world market. It provides lenders the confidence to let farmers put a crop in the ground. Finally, farmers are footing approximately 50% of the bill, and insurance is designed only to pay a portion of losses. If Congress continues to maintain the goal that insurance ought to replace ad hoc disaster assistance, I would suggest redoubling efforts toward the development of new and improved crop insurance products and risk management education. Congress deserves credit for improvements in the Federal Crop Insurance Act made in the 2014 Farm Bill that required new policies to be improved without some of the bureaucratic red tape that effectively halted new policy expansion in the past. Congress should remain vigilant against attempts by the Office of Management and Budget to burden USDA with new obstacles. Historically, most of the new products have been created by the private sector. They've done a tremendous job. That should continue. In addition, the Risk Management Agency has the capacity to develop products where the private sector is not doing so, and I would suggest we look into that. Finally, I think increased education by the Risk Management Agency to educate producers on the value of insurance could benefit. In conclusion, I appreciate the opportunity to be here today. I commend your decision to look at farm policy and how it's responding to adverse conditions, and look forward to your questions.
Thank you all for your views regarding this very important topic. I would like to submit for the record a written testimony of a fellow Texan and wheat farmer, Ben Schultz, in his role as president of National Association of Wheat Growers. Members will be recognized for questioning in order of seniority for members who were here at the start of the hearing. After that, members will be recognized in order of arrival. I recognize myself for 5 minutes. The Agriculture Committee has heard time and time again about the importance of crop insurance for farmers. Today, your testimony reiterates the need for this robust risk management option. In March of this year, President Trump released a budget for fiscal year 2020 that would reduce the average crop insurance premium subsidy rate from 62% to 48% and would cap underwriting gains for crop insurance companies at 12%. What sort of an effect would this have on the farm safety net? And would this be especially problematic for farmers who have suffered a loss due to natural disaster? Mr. Lubin, Mr. Willis, why don't you chime in on that question?
Thank you, Chairman. I appreciate the opportunity to respond here. We understand that crop insurance as it's currently delivered is effectively a cost share between a producer and the federal government. Reducing that federal portion certainly puts more of a price on the producer, and all other things equal would certainly reduce participation rates. That might, on budget, bring down the cost of the crop insurance program, but that would also put more risk on potential emergency response and ad hoc assistance from Congress at a later date. So reducing participation rates is fully expected if that was the move. Reducing participation rates would create more risk in the industry.
The Crop Insurance Act requires that there be what they call a little reasonable reserve. So in reality, farmers actually already pay around 50% of the cost. It's often talked about as being 62, 63. The reality is in practice, it is less than that. So farmers are paying more already. You know, every year, the president's budget has a long history of suggesting draconian cuts to agriculture. I think in the long run, those would only harm farmers and taxpayers because we'd end up paying more through other avenues such as ad hoc. So, I think you would find that if any of those suggestions were adopted, you would end up spending more money in the long run.
Ms. Gertis, when I first met you, I think in Kansas City, and it was within a month after the flooding, and the pictures that you shared with me were pretty drastic. I'm curious, what's that looking like now?
We've since had an additional round of flooding, and it is as bad or worse. We have very little infrastructure between Nebraska, Iowa, and Missouri. In order to get to my partner in Rockport, Missouri, which usually takes me 20 minutes, now takes me 3 hours because I either have to go to Omaha or to St. Joe. Most of that ground is still under 3 to 5 to 6 feet of water. In order to settle some of these claims, we have to use drones, go on the bluff. We're using some pretty amazing techniques. Liz Bergeman, a staff member of mine, a young agent, took quite an amazing airboat ride. And you all have the video. It's something to see. We're 4, 5, 6, 7, 8 miles from the Missouri River and underwater. So it's not going away, and unfortunately, for some of you downriver, it's not going to be any better. So we're still very much under siege, Mr. Chairman.
So for those of us that are not from the Midwest, can you give us, and from a national perspective, right, can you give us an idea of the geographic scope of this damage?
I think you really start up in where the Missouri River starts up in South Dakota and then comes down. So you've got Nebraska, Iowa, corner of South Dakota. You come down the Missouri River, you've got Kansas, you've got Missouri as a whole where the Missouri River cuts across. Is the central part of Missouri is just a wash. And then you come in where it dumps into the Mississippi and it will go all the way down. So the midsection of your country is flooding along with all of the rain that you've got in Illinois, Indiana. I have a partner in Ohio. She's going to have massive prevent plant. So you've got almost every major river and every watershed in a flood status in the Midwest and even the Eastern Corn Belt. It's as massive. I've lived and worked there 40 years. I've never seen anything like this.
Thank you. I now recognize the Ranking Member Thompson for 5 minutes.
Chairman, thank you very much. Members of the panel, thank you for being here, and thank you for bringing your expertise to Washington. It really helps us as we prepare and look for future policy decisions related to what I think is probably one of the, obviously, the most important committees and important work when you look at the food security of a nation that we do here in the Agriculture Committee. Dr. Lubin, we've heard today mostly about the impacts of recent weather-related disasters, and certainly the amount of rainfall. We're not. My heart goes out to the folks in the Midwest with the massive flooding. In Pennsylvania, it just rains every day, it seems like, and it has for some time. So we may not see the flooding, but we see the impact on agriculture as well. Dr. Lubin, you mentioned the downturn in the farm economy has been plaguing producers for going on 6 years now. So farmers were and are experiencing lean times. Can you comment on the financial position of most farmers generally, and in light of the widespread losses we may see this year, both price and yield related, just how precarious is the situation and how much worse could it be without some of the programs or assistance we're discussing here today?
Yes, thank you, Mr. Thompson. I appreciate the opportunity to add input here. While this is the strongest, deepest downturn in real farm income in a couple decades, it fortunately does build from what was record farm income and a very strong balance sheet. So when you look at the aggregate numbers, the total farm sector balance sheet still looks very strong, from near record strong debt-to-asset ratios, very low debt-to-asset ratios that have been going up, but still very manageable. But when you specifically look at the portion of producers that are leveraged, recognizing that there are many that are full equity with no borrowing or very little borrowing, when you look at the segment of producers that have leverage, that are borrowing, the beginning producer that's growing, maybe the aggressively growing producer that's leveraging both equipment and land, or exposed to bigger cash flow needs for rented acreage and so forth. Amongst that segment, this is becoming a more challenging circumstance. Again, I don't have a statistic in front of me, but I think we could say that we're moving from strong positions to moderately at risk positions. And for some producers, we're moving from moderate risk to very substantial risk. And so without a safety net to depend on, both the commodity program and the crop insurance program and the additional programs as they come out, without that safety net to depend on, we will see an increased number of producers dealing with extremely stressful conditions. We've seen increased calls to our stress hotlines in Nebraska and elsewhere. We've seen increased evidence of changes or liquidation, but in aggregate, still a very strong sector, but certainly with very pointed challenges for some producers.
Good. Any other rest of the panel care to comment on a particular question? Go ahead, Mr. Elman.
I'd just like to add that this year's event is unique to a lot of the others. In 2011, our flood came in, historic flood came in June, July, so our crop was planted. We lost that crop. We picked it up 2012, 13, and 14. We had decent crops and a very good price. We recovered financially. This year's event will affect a minimum of 3 years. The 2018 crop that was destroyed in the bins, naturally this year's crop, tremendous amount of prevent plant, tens of thousand acres will not get planted and a lot of destruction. And then as Ruth pointed out, and I mentioned earlier, if the levees do not get repaired, we will be at risk in the future. So thank you.
How many of you are seeing, because of the amount of rainfall that I monitor, I look at this on a daily basis, it's impacting corn, soybean plantings and how late it is. I mean, I think we're kind of past some of the crop insurance dates, aren't we, or fastly approaching it, which gives us risk with, if it's an early fall or depending on frost and the weather going forward. That's going to be an issue for us. Chairman, thank you.
Thank you. Ms. Craig from Minnesota is now recognized.
Thank you very much, Mr. Chairman. I have a statement to be submitted for the record as well. Thank you to the chairman and ranking member for holding this hearing today, and thank each of the panelists for being here this morning. This is an incredibly timely conversation and a much-needed discussion given the planting conditions throughout the Midwest and my state of Minnesota. Before I start, Mr. Chairman, let me say that it absolutely breaks my heart to see what's going on back home when it comes to weather uncertainty, trade uncertainty, forage uncertainty. These folks can't catch a break. All of you on this panel know we are watching one of the greatest farm recessions of our time, and not enough people are paying attention. It's time my colleagues outside this room show that they care about family farms and the issues they're facing. Farm country is in a crisis, and it's about time those of us in Congress act like it. I hope each of us can go back to our farmers at home, look them in the eye, and tell them that we hear them and that we mean it. Thankfully, the work of this committee in the last Farm Bill upheld the cornerstone risk management tool of crop insurance to be there for farmers when disasters hit, and thank all of you for being here today to speak to its importance. As many of you have spoken to, farmers throughout the Midwest have been fighting wet conditions and flooding. Now, thankfully, my district caught a few dry planting days recently, but not everyone has been so lucky. I'm proud to work with my colleague, Mr. Dusty Johnson of South Dakota, on the FEED Act to allow additional flexibility in the harvest of cover crops on prevent plant ground. I'm pleased with the agency's willingness to work with us on this issue, and I'm hopeful that this will soon bring additional relief. Mr. Davenport and Mr. Willis particularly, can you speak to the importance of both incentivizing cover crops on prevent plant acres where possible to build resiliency, but also the need for forage given this year's wet weather conditions? I'll let you arm wrestle.
Congresswoman Craig, first I would say, as to the current year, at least according to the reporting this morning, it appears USDA is going to move that date up to September 1st, which obviously in Minnesota and South Dakota is a date they really need, because in the past, they've moved that date up to October 1st, but when you get that far north, it's maybe earlier to actually be able to do something with those crops. So we do feel that is very helpful given the current situation. When you look at a more permanent type of solution and providing that solution, there's, I guess, a lot of moving pieces to that we need to, really think through, including, how the secretary is going to determine that there's a feed shortage, and to make sure that, that's going to be done in a consistent fashion. Going forward, we do have concerns with the ability for a farmer to donate the crop and how that would be sort of monitored to make sure that, there's not anything inappropriate going on. But, the broad concept of it kind of matches what USDA has done in the past as far as moving the date earlier in specific situations where there are shortages of feed.
Mr. Willis, any comments?
USDA's come a long way on cover crops. I think people would be surprised at how much time the Risk Management Agency has spent trying to make sure that the crop insurance program works in concert with cover crops that producers want to plant. I think there's a success story there. If what Mr. Davenport says is correct on the September 1, I think that's a positive thing. In reality, I think that's something that Congress needs to spend some time looking at, because certainly when there's unique circumstances like this year, you need to help the farmers, you need to help agriculture. At the same time, you do have to balance that with prevent plant, and then certainly you want to make sure there's no abuse there. So it sounds positive what they're doing. I really think that Congress should look more into that in the future so that perhaps we have a more steady policy moving forward.
Thank you very much, both, for your comments. I'm looking forward to the specifics of the Secretary's announcement as well this afternoon, and I know Dusty and I are going to be talking about Congress's role moving forward. So with that, thank you all again for being here, and Mr. Chairman, I yield the remainder of my time.
Thank you. We now recognize Mr. Austin Scott from Georgia.
Thank you, Mr. Chairman. And Mr. Boone, the losses in your state were similar to mine. Our commodity are the same in the areas that hit the losses in Florida, and Georgia occurred from Hurricane Michael. The University of Florida and the other estimates that we saw from Florida with regard to cotton totaled around $50 million. Does that sound about right to you?
Yes, sir.
I want to share a number with you. The USDA estimate for Florida losses was $12.898 million. For Georgia, our Extension Service estimated that our losses in cotton were between 550 and 600, and yet the USDA estimate was 300. And just so the members of the committee who recognize the challenges created for us is that we were successful, much credit to my friend and colleague Sanford Bishop, in moving from $1 billion, which was the request from USDA for the losses, to $3 billion, the total amount available for agriculture. Let me stress, that's the total amount available for agriculture for the 2018 storms, based on additional information that we had from the University of Georgia, the University of Florida, the University of Alabama, from local extension services. But we have got to have estimates from the USDA that reflect the total losses so that when we write a disaster bill, the funding level reflects what is necessary to offset those losses. And that's something that I simply want to make the other members in the panel aware of. The discrepancy in what we had from USDA in the loss estimates and what we saw from the states. I want to get to the issue of timber. In Florida, the timber losses are estimated at $1.3 billion. And I want to still go to you, Mr. Boone, on this. If somebody who was a timber farmer came to you and said, I'm going to buy 1,000 acres of land with timber on it, the total value is going to be around $3.5 million. I'm going to put 50% down. That'd be a pretty good loan, in your opinion?
Yes, sir. Anytime a grower is willing to put 50% down, it's a good loan.
What is the value of that land if that timber is laying on the ground from a storm like Hurricane Michael?
It drops significantly. I don't know an exact number, but the timber adds a lot to the land.
It would be, I would think in our part of the world, it would be worth less than $1,000 an acre if that timber is laid on the ground and you've got to pick it up. Because it truly, the timber was worth nothing once that storm came through. And that's brings me to the next question. How do we improve the current crop insurance programs to be more helpful for areas like timber, pecans? I would tell you a pecan orchard, same thing. If you had 50% equity in a pecan orchard or a fruit orchard, that would be considered a pretty good debt to equity ratio for a farmer in those types of areas. How do we create a crop insurance program for specialty crops like pecans, vegetables, timber, and the other areas where we saw the shortcomings from Hurricane Michael? That may be a better question there for the insurance side of things. Mr. Davenport? They don't exist for those.
Yes, Congressman Scott. On the timber, Congressman Lawson asked me about that a few weeks ago, and it is an interesting situation to think about from an insurance standpoint because the way that the timber is handled in the Southeast is, it's a lot of smaller producers like you're talking about, and they, keep the ground for 10 or 20 years. They're not actively harvesting the timber during that time period. So you're really looking at a very long window that you would want to have sort of a policy in force for that particular piece of ground. So it's different than the other products that we offer that tend to be annualized products. Some of them on pecans, as far as the crop itself, is a 2-year crop because the trees are alternate bearing trees. So that there are some unique challenges to think through on timber.
But on pecans, you're talking about the actual nut, not the
actual
tree.
Nut, yes. And there is a pilot program right now on the pecan trees.
The tree assistance
just
program.
rolled out, and it's fairly complicated, and it needs to be revised for sure.
It doesn't work.
I would not dispute that.
It doesn't work.
We didn't design the product. We're just
Right. Fair enough.
Trying to implement the product.
My time has expired with I would just suggest that as we move forward, as there's more diversity in agriculture with regard to the crops, we need to find ways to make insurance products available for these additional commodity groups. And I hope that I know my colleague and I, Congressman Scott, have talked about this in creating some type of loan program so that when a disaster happens, people in other parts of the country are not pushed past planting seasons as our farmers were. With that, I yield the remainder of my time, which is gone.
I now recognize Mr. David Scott from Georgia.
Yes, I'd like to just pick up on the line of questioning of my good friend Austin Scott, because we're going to have to do something about making sure we have adequate coverage for timber, for our pine trees especially. Georgia has a ton of pine trees. All over the South, we have these trees. And it's often times You know, if someone has, let's say, 50 acres of just pine trees, it's almost like a savings account, or maybe help for a child's tuition to college for farmers. And we're not adequately providing coverage for them. With crop insurance generally not available for trees of that respect, growers have been forced to rely on disaster assistance, which God knows we know from this recent situation in Congress. It not only is slow in coming, it is almost criminal to our farmers, the fact of what happened in the last couple of years here. In Georgia, many of our farmers have not had a crop in 2 years because of back-to-back hurricanes. But because of the slowness in getting the financial disaster. So my question is, what do you think will be the challenges and opportunities in creating a crop insurance product for privately held timber? Would you share with us? Anybody? That may be a slight indication of the problem.
Congressman,
Could such a product be, I'm sorry, go ahead.
I don't know anything about timber. I don't know anything about pecans, but I've been dealing with crop insurance for darn near 35 years. The success with any policy always starts at the grassroots. If you try and push it from the top down, it doesn't work. My suggestion would be to get a few agents in your area and a few farmers that are passionate about this and come together, come up with an idea, take it to an AIP, all AIPs, NCIS, and see if you can develop a policy through the 508H, through NCIS, something, because if it comes from the bottom up, you'll have something that works that you can deliver. If it comes from the top down, it will not work and you can't deliver. And that's spoken from somebody that's been on APH task force changes, trend-adjusted yields, and I was very involved in getting the revenue policies put through. And trust me, I was told time and time again it couldn't be done. I don't know anything about your issues, but I know how to start the process to help you.
So do you think crop insurers would be interested in such a product?
They are always interested in a product if there is a market for it. If there is a need, there can be developed, but it's going to take some heavy lifting to figure out how to do that and do it. And you referenced it in your talk about creating a health savings account. Maybe that crop is appraised and valued, and it's an ongoing premium that's paid small amounts every year. I mean, I'm just thinking out of the top of my head, but I don't know your issue, and I am mindful that they do the standard reinsurance agreement. These companies have to take risk.
Do you, because we got a problem here, the farmers out there, and when these things happen, we're going to get floods, we're going to get hurricanes, we're going to get all of this, and we're not taking the best interests of the farmer into consideration. I mentioned earlier the haphazard way and the slowness that this Congress removed with the federal disaster aid. That's all the farmer's got. He's got crop insurance or he's got disaster aid. Let me ask you, do you see any tension between the disaster aid and supplemental defense, disaster aid coming from us and the crop insurance coming from you? any tensions there?
I do not see it in my area because my farmers understand they cannot rely on ad hoc disaster. We went from, 2015 or 2005 to 2016 with no ad hoc disaster. We've already paid farmers for their 2019 prevent plant. They know the majority of their income's coming from crop insurance. We have an exceptional event in our area, and it certainly sounds to me like you have an exceptional event. We have to be mindful there's a social perspective that no insurance company can cover, and that's why we need to figure out a cost share and a policy. It pains me to hear that your farmers in 2018 get paid. We're already paying our guys in 19. That's very sad.
Well,
We need
thank
to
you
step
very
up.
much, and our farmers need all the help we can give them. Thank you, ma'am.
We now recognize Mr. Allen from Georgia.
Thank you, Mr. Chairman, and I want to thank all of you for being here because I will tell you that what I hear from all of my farmers in my district is that the crop insurance, even under the new farm bill, it will not deal with disasters. It just doesn't work for disasters like we've seen. And you know, they have suggested some ways to improve the crop insurance program. The big problem you have, I mean, the large growers, you know, even in the timber industry, aren't as concerned from an insurance standpoint because they got timber all over the, you know, all over the country, all over the state or multiple states. It's the small growers, and like the big, recently in Georgia, we've had a number of blueberry producers, and these are mostly small 500-acre, 1,000-acre producers. You know, we've had two major freezes, and you know, we've had tremendous growth in blueberry production, but when you look at the results of this freeze and what it's done to our producers, all of a sudden, you know, they're in serious trouble. You know, many of our southern commodities like blueberries are regional crops. They're concentrated in certain areas of the state. And those developing the crop insurance products are just not there. They're not available. How can we get crop insurance more focused on smaller regional commodities? Mr. Boone, what would you recommend we do for these folks?
For crop insurance, sir?
Yes, sir.
I'm not a crop insurance expert.
Okay.
I'm sorry, Mr. Congressman, I'm not a crop insurance expert.
Right. How about it, Mr. Davenport?
So there was reference earlier to the 508H process, which is a process where private companies can submit products to the risk management agencies tailored to specific crops. RMA also, through the last Farm Bill, was given specific direction to look at particular crops and specialty crops as part of that, and they are doing that. One product that is currently available that crops that are not specifically covered under the Crop Insurance Act are available to purchase is the whole farm product, which ensures the revenue for an entire operation. And there's a long list of things that are eligible under that, including, I know cut flowers is one of the things that we've gotten questions about recently. Hemp will be covered for the 2020 year. So it's a product that is very flexible and can accommodate a lot of different operations. So that's probably the best option currently. But they are constantly looking at other areas to offer new products. And the big part of that is, as Ruth had mentioned, is making sure there's a market for the product, because we don't want to roll out a product that nobody wants to buy. And pecan trees was kind of in that category when it came out. It was a very complicated product. We sold very few policies. And it doesn't work very well. So RMA is looking at, you know, how to make that product work. Unfortunately, the timing of it wasn't great because it was a brand new product, and then we have hurricane losses coming right after that. I have every expectation the product will be improved and will get to the point that it works, but it's obviously has some work to do before we're there.
Thank you, sir. Mr. Willis, could you comment on that as well as in your written statement, you mentioned the lack of information available to help farmers understand the economic value of insurance. And again, that seems to be a problem, is whether you buy this or not. And, you know, is the cost, the premiums worth it or not? Could you address that for me?
I can. I appreciate your comments that you said that some of your smaller and mid-sized farmers are the ones that really need insurance. And sometimes we hear that insurance benefits the larger producers. The reality is, my experience is like yours, in that crop insurance often benefits the small to mid-sized who cannot afford to take that kind of a loss. I think moving forward, I have a lot of confidence that these losses can be covered if we have a focus on making sure we cover them. Historically, the insurance program has kind of taken this off-the-shelf approach where we take one policy for one crop and apply it to another, and that's worked very well. But we're probably to the point where we need to take different approaches. For example, if a hurricane is a major cause of loss for timber or for any other crops, or freeze is a cause of loss, perhaps we should consider a new approach. Perhaps a policy that just covers freeze loss for blueberries, perhaps one that covers hurricane loss. The final thing on education. You know, if you look at some of these tree policies, a lot of people are not purchasing them. There's two problems. A, they're being charged too much, and so they're making a smart economic decision to not purchase it. B, they don't realize the losses that could take place, and they should be purchasing it, but they don't see the value of that policy. USDA could do a tremendous job. One of the things that when I was administrator, I got briefed a lot, and my team sent tremendous information that showed the value of these products. That information needs to go to the growers to the extent that it can.
Right.
And I think more education to help them see the value, sending it to agents, companies, and to extension people.
Yeah, and Ms. Gertis, I like your approach to it, the bottom-up approach rather than top-down. And Mr. Edelman, I'm out of time, but I'd be interested in contacting you later to talk about the levies. And I understand the Corps of Engineers is involved in that, and I've got a problem with the Corps of Engineers on a project in my city of Augusta, and I need some feedback on your experience with them out there. Thank you very much. I yield back.
Mr. Lawson from Florida is now recognized.
Thank you, Mr. Chairman, and welcome to the committee. And I've been really impressed with the level of experience that you all have. And I would say, Mr. Scott, a couple of weeks ago, I was driving through South Georgia, and I saw a lot of the damage from the pecan trees. And I was saying, you know, how long are it going to take them to recover? Because it takes so many years to wait those trees, new trees that they plant. I saw a lot of the trees being planted to produce. But my question would be, first, going to you, Mr. Boone, can you explain how the impact of extreme weather changes, the way lenders work with farmers and ranchers?
Yes, sir, Congressman. Farm credit has been around for over 100 years, so, you know, this is not our first rodeo when it comes to dealing with extreme changes in weather. One of the first things that we see when there is a disaster in any particular area, our regulator, you know, sends out notice to us and encourages us to use every tool available to us in order to help that area farmer and rancher. And fortunately, we do have a bunch of tools in front of us. So, I mean, we can do anything from a simple deferment where we're putting the interest off, the payments off for a few months or a year, to a restructure to stretch the loan out, stretch the terms out to get the payments down, or to even do a more drastic restructure from the standpoint of setting aside part of the principal and just work on a part that the operation can currently support, and then address the balance of that principal at a later date.
Okay, and it really didn't really have a thought on this until when Michael hit areas of North Florida and South Georgia, and to see all the problems that happened to the timber industry, which probably in the state legislature had represented a lot of those areas for a number of years, still not really given it. We were worried more about the red-head woodpecker than worried about all of the damage and all the trees that was on the ground. But what really happened that was brought to my attention was the number of private growers that planted these trees on these smaller farms really for their retirement purposes or to leave something for their kids. And to see where they don't have anything to turn to now because it was I don't know how it was discussed earlier, and I think David Scott mentioned some of it. What do we do about educating the private growers that are looking out for future generations and for their own retirement that has lost just about all of it, acres and acres as I go through North Florida and see all of the trees down? Can anyone share, in the past, has that been an interest of anyone in the crop insurance area about all of these little private tree owners that they have? Can anyone respond to that?
Congressman, I would say from my perspective, we had not been asked about timber until a few weeks ago was the first time that I'd actually been asked about that, and we've been thinking about it internally as to how you would go about it. And as we were talking about a little bit earlier, the challenge in my mind is that, you know, if you're looking at a 20-year period that you're going to have the trees, how to structure a product that makes sense for the grower, because you certainly don't want the grower, sort of like happens in California with earthquake coverage. People buy it randomly. They'll buy it for a year, and then they don't buy it for a couple years, and they buy it for another year. And if you're going to truly manage that risk, we're going to want something in place for them where they actually buy the product and keep the product for the entire time period, because otherwise it just doesn't make sense to sort of randomly decide when to purchase it and when not to. So it's a unique challenge, I would say, but I think it's something that certainly should be looked into.
Okay, my time has almost run out, but how does farm credit stay sovereign with all of the disasters that we have, particularly in Florida?
Well, obviously, you know, the programs that are available through the USDA, we do use the FSA guarantees a good bit. We also are a big believer of crop insurance programs. And so with the combination of that trilogy there, and making safe and sound loans as much as we can, we're able to, you know, pretty much stay ahead of the game. Now, Florida, Farm Credit of Florida, as I talked about in my opening statement, is so diversified that typically when we have an adversity in one area of our territory, the rest of the territory is pretty good. So we never have anything that has really crippled us over the long term in the 100 years that we've been around.
Okay, Mr. Chairman, I yield back.
Mr. Crawford from Arkansas is now recognized.
Thank you, Mr. Chairman. Obviously, going to talk about crop insurance. I come from Arkansas. My district counts for about 50% of the U.S. rice crop. And rice is it's a tough one to get your arms around with regard to crop insurance. And so I've been texting back and forth with some rice farmers back home. And what's the biggest concern? Actually, two of them. The rice belt extends from southeast Missouri down to Texas. That's the medium long grain. California is a little bit of a different animal, so I'll just stick with the mid-south rice belt. But the prevent plant deadline in Arkansas is May 25th. Agronomically, what we know, and certainly in our latitude, is that May 15th, anything after May 15th is a crapshoot. And so that, that date doesn't seem to reflect. Is there any chance we might see some alterations to adjust those dates latitudinally? I mean, even not just for rice, but other crops in different latitudes where it makes more sense agronomically to consider that. Your thoughts on that?
Congressman Crawford, I would say that's certainly possible. When you look at other crops, those dates do vary by area. You look at corn and soybeans, and it varies quite widely depending on where that crop is at. So I would say that's definitely something that RMA could look at and make changes to.
The blanket approach, I mean, this is kind of typical of Washington. We tend to try to look at things in one-size-fits-all context. But I just think there's so much difference geographically in climate conditions and so on at different times of the year. Further south, it's not uncommon at all for them to get a second crop. A ratoon crop is fairly common in places like Louisiana and East Texas. That's not something that is common in our neck of the woods. So southeast Missouri, northeast Arkansas, and further south into Mississippi, that's the exception. The other issue is what's not included is row rice. And that's another complaint that we get from our rice farmers, I think, across the belt, is that row rice is not included in crop insurance. Any comment on that?
I would, again, from my perspective, say it's something that could be a program expansion. Every year RMA comes out with additional crops that are insurable, different practices that are insurable. So it would certainly be something that could be expanded.
Okay. One of the other things that we talked about, and I've heard this reference throughout the hearing, is how do you get more people participating in crop insurance? I mean, bottom line is insurance, like any kind of insurance, is about an actuary base. Isn't that right? I mean, expanding the actuary base, spreading that risk over a broader area. I understand that there are a depth and breadth of crops that have to be accounted for, and it's not necessarily, just like I said, one size fits all is not going to answer this question. But broadly speaking, that expanding the actuary base seems to me, is there a way maybe that a whole farm takes a look at this, maybe some tweaks there to make that to improve the uptake on expanding that actuary base and incentivizing farmers to participate at a broader scale?
Certainly, we think whole farm is a product that we've seen significant growth in the last couple of years, and as more farmers become familiar with the product and understand the product, we anticipate that to continue to grow and to help farmers cover those crops that are more.
That's the key there is the understanding part of it, because it's so complicated, and I think a lot of farmers are afraid of it, quite frankly. But it seems to me like if we're really trying to expand that base and get people more, then we've got to do a better job of being more proactive on communicating just exactly what this entails, making them understand, because it's a difficult thing to get your arms around, just generally speaking. So I appreciate y'all being here today, and I'm going to change subject real quick. Mr. Edelman, I'm going to direct this question at you, and I appreciate you bringing attention to the connection between our lock and dam systems and the losses we're talking about here today. It isn't directly in the jurisdiction of this subcommittee, obviously, but I'm on the Transportation and Infrastructure Committee, and many of us on this committee serve on that committee as well. And looking across the federal agencies that you interact with, are there any additional problems that could be addressed to help prevent disasters from occurring that farm policy isn't bearing the brunt on these losses?
I'd like to say on this 2019 event, there was a complete breakdown. Right from the start with the weather forecasting was a huge issue. On March 6th, the National Weather Service out of Kansas City released an greatly enhanced risk rating over a large group of tributaries in northwest Iowa, northeast Nebraska, and northeast Nebraska and southeast South Dakota. The Platte River, Northern Niobrara River, neither one were on that enhanced list. 7 days later, we had a disastrous flood out of the Platte River in the Niobrara. So when we pushed the issue, we found out that we're really concerned that their modeling they're not using the right models, and also the modeling is not frequent enough. When you get in that enhanced risk category, you've got to do more modeling frequently to keep it on those conditions when we're talking about a bomb cyclone event coming through. So that was a huge event. Also, the communication from the United States Army Corps of Engineers out of the Omaha District was non-existent. In the past flooding, they were very hands-on, gave us a tremendous amount of warning, worked with our levee state sponsors to let the citizens of the valley know to evacuate. We had no communication from the Omaha District this year. When we finally did get communication, it was not accurate and it was too late. It was issues like overtopping we'd already knew about 3 days earlier. So it's a complete breakdown from square one. Thank you.
Thank you. Yield back.
Ms. Axney?
Yes, thank you, Mr. Chairman, and thank you, members of the panel, for being here. And a special thank you to Leo Edelman and his wife, Angie, for being here today. They're from our flooded area in the 3rd District in Iowa, and I think they bring an exceptional amount of knowledge about the situation that we're facing. They're not just farmers, but they're also small business owners in the area. So they've felt the impact from an agriculture perspective, but also from, even though specifically where their business is located wasn't necessarily flooded, traffic isn't flowing well. People have left the area. We're seeing a major impact on our rural communities. So I'd like to take this a little bit further from where Mr. Crawford was about the systems, the processes, and the communications that you've experienced throughout this entire time. Just to go back, and I know that there was some information presented on this, but from January to early March, we had record snowfall and freezing weather. Just to put it in context, we had 340 individual city record low temperatures in the Midwest in 2 days, January 30th and 31st, when our temperatures dropped to, yes, folks, as low as -50 degrees. And then in February, we got about 25 inches of snow just in the Des Moines, Iowa area. Nebraska, Omaha, Nebraska got 27 inches. North of us, about 30 inches. So we were inundated with snow and cold weather. Then hit by the cyclone blizzard, so one of the most intense this country's ever seen on record. And the water had no place to go. Ground was incredibly frozen, of course. Everything was oversaturated from the heavy snows. And so where did it go? It went into our farmlands and lowland areas. And today we're seeing the results of that. So I'm very grateful that the President signed the disaster bill into law. I'm thankful that in the House I was successful in getting $3 billion of funding specifically for the Midwest flood because it's very critical that we address this. But as Leo said in his testimony, he discussed that he's had major flooding before, in particular in 2011, when the levees breached about a half mile from your farm, I believe. And he stated in his testimony it took 4 years to clean up the mess, so almost until this last flooding. And then my questions and concerns that I've been hearing, and we've talked in the past, we got a lot of work to do with the Corps of Engineers, and I'm looking forward to working with Mr. Allen and Mr. Crawford on that. We'll table that for a minute because we know that there's a lot of communications issues there. But I've also noticed that within our own structures, our departments in government, that there's issues there with our procedures and processes. And so, Leo, I'd love to ask you, given your unfortunate experience with flooding, is 60 days an appropriate time frame to apply for these important programs?
In the past, yes. 2011 were our unique events, and the extensions are definitely important because even today, 97 days and counting, this flood has been going on. 2011 event, 140 days. So we can't get out there for the ECP program. We can't get out there to see any damage because there's water on the ground. We can't get out there to do anything to recover. We don't know how much of our grain out there is destroyed if they're in those bins that are landlocked out there, whether they're salvageable or not. So extensions are very important, yes.
Okay. So what does your farm look like at this time?
We have numerous tracts of land, but the home base, the water is going down because the Corps of Engineers are getting that breach plugged. In fact, it might get stopped today. So the water is going down. Interstate I-29 opened up 2 days ago from St. Joe to Highway 34. The entrance and exit ramps are not open, so you better have a full tank of gas when you get on there. So there's a lot of over-the-road trucks getting stranded out there, I know that. So, but the roads between are destroyed. To get from east to west is impossible. Those east-west roads are completely destroyed.
So limited time to be able to see what you need.
Exactly.
Other question is, I've heard numerous stories from folks, small business owners, farmers, and homeowners alike, that they don't know about all the resources they have access to. I know that you're heavily involved in this. Do you know of people who have no clue about what things they have access to and how they can find those resources?
Yeah, the wheels are turning on that. We had a meeting yesterday with Governor Reynolds on this task force with SBA and Homeland Security and things like that to get people. We've had a lot of issues with temporary housing, getting those trailers into our area from, so the people that are dislodged, some of them living in basements of their relatives or moved out of the area, and they want to get back home. They maybe get out of somebody else's house and get on their own. So getting that temporary housing has been a huge issue. And, but otherwise, you know, it's a real learning curve when you have events that long, you know, to deal with it.
Yeah.
Wheels are turning.
Absolutely. Of my time, thank you. We have so much more to discuss here, but I want to thank you for being here. I want to continue this conversation that I think within our government entities, we do not have proper processes and communications in place to help our families in need. Thank you.
Thank you. Mr. Johnson, South Dakota.
Thank you, Mr. Chairman, and I know I'm not telling the panelists anything they don't know, but oh my goodness, did the winter and spring of 2019 push a lot of very hardy producers to the brink, and frankly, I think it kind of pushed the farm safety net to the brink. I mean, it was just these slow-moving disasters are the hardest ones to psychologically really wrap your mind around. I mean, as wet days turn into wet weeks, turn into a wet month, you just see the days on the calendar, the planting days fall away, fall to the side. And people aren't sure to the extent that they'd be able to get the corn and the beans in, and although it's been a little bit better in the last couple of weeks in South Dakota, we are still a long ways away from where we need to be. You all know that, and I thought a number of you did a good job of addressing it. I was grateful that Congresswoman Craig mentioned the FEED Act that she and I have been working together on to provide USDA the flexibility to prompt them to move that November 1st, chop, hay, graze date to September 1st when they, during an emergency situation. And it sounds as though we're going to have some good news here sooner rather than later, maybe even today. That's the kind of flexibility that I think really helps. When you've got widespread prevent plant environments, it is good to be able to have that kind of flexibility. So, Ms. Gertis, I really liked in your testimony how you laid out a number of tangible improvements to the crop insurance system generally. What I'd like you to do is put a little more meat on that bone, particularly with regard to areas that have widespread prevent plant. And it seems that maybe the prevent plant system works less well when you have a systemic need for that to work. Any improvements come to mind? And as you talk about any improvements, do we have the authority we need today under the crop insurance system to get that done?
I'll answer the last part of that first. I think you do have the authority. I may be corrected on that, but I believe the authority is there. I was involved back in 1993 when Prevent Plant was put in June for 1993 payments. So my history with Prevent Plant is very deep. I was very disappointed to see USDA listen to OIG on Prevent Plant. Any of the actuarial folks, Mr. Davenport, any company will tell you a 5-year window to develop policy is not actually sound. I saw it on the APH task force. They wanted us to have at least 20 years of data to come up with rating on APHs. So for a government to do that was tragic. We would not be in the position we are today on Prevent Plant had that not happened. Now, we can learn something though, because we don't want to incentivize farmers not to plant. The other thing that's happened, particularly in your area, in my area, Iowa, all over, is when we put Prevent Plant in 1993, there wasn't the extensive use of cover crops. And we certainly never used it, but we use cover crops on a significant number of our acres now for conservation issues. I also grew up on a ranch in western Nebraska. I'm a ranch girl at heart. So I understand when you have the kind of bomb cyclones, you have weeks and months going on, there is no feed available for some of these ranchers. And we need to do something, and this cover crop is an opportunity where we can develop something in the long term. So I think you're on the right path, and and I think it can be done.
So any other ideas? I mean, so you talked about concerns you had that they were listening to OIG, the 20-year data collection. I mean, are there any other specific improvements that we could make to the prevent plant universe generally?
There's one very important one, and you all probably haven't heard about it yet, but trust me, in about a month you will. As these farmers start to file acreage reports, if you have your entire farm, the entire farm is flooded, and you were signed up for an enterprise unit, and you didn't get your 20 acres in 2 separate sections on that crop planted, your premium just doubled, or in many cases, particularly up in your area and in my area where you've got high-risk ground, I figured one the other day, it's going to go from $26 an acre to $99 an acre. So I think that, I don't know whether the authority lies with RMA or the authority lies with the committee, but I would definitely, if you're fully prevented from planting in a year like this, to allow that farmer to have the enterprise unit discount, because his intention was to plant it all.
Well said. Thank you very much, Mr. Chairman. I yield back.
Before we adjourn, I invite Ranking Member Thompson to make any closing remarks that he may have.
Well, Chairman, first of all, thank you. Thank you for this hearing. It is the importance of it, the timeliness of it. You know, thanks to the staff on both sides of the aisle that worked so hard to help us to be able to do this. And thanks to the members of the panel. All of you traveled quite a distance to be here, and that really is a sacrifice and a service that serves well all farm families, and it's appreciated. You know, farmers have always faced risk and working so hard to feed, clothe us, give us building materials and energy, and we should be proud of this committee's work in the 115th Congress in the 2018 Farm Bill, in this risk management commodities title. That said, our American farm families are counting on us to do our very best regarding risk management that works for all commodities. You know, farmers don't want a handout. They just want a fair shot at managing what is truly probably one of the most risk-filled industries that there are when you consider the weather. So, Chairman, thanks again. I yield back.
Thank you. I, too, would like to thank committee staff and all of our member staff for putting this really very important hearing together, for our members for their participation, and for our witnesses coming from across the country. The ranking member and I met about a month and a half ago, and you know, having heard the concerns of our members from the Midwest, from Georgia and Florida, we really wanted to focus on the severe weather events that producers in those regions experienced, and you've done a really great job in informing us about what has happened and giving us some guidance in terms of what it is that we can do to move forward. You know, hopefully we can address with the Transportation Committee some of the Army Corps issues, and so we'll start working on that. With that, under the rules of the committee, the record of today's hearing will remain open for 10 calendar days to receive additional material and supplementary written responses from the witnesses to any question posed by a member. This hearing of the Subcommittee on General Farm Commodities and Risk Management is now adjourned.